Hi traders, welcome to this video with me, 𝖢𝖥𝖣yiy, Senior Market Analyst. In this video, I'm going to teach you how to break down a chart top to bottom, and we're going to be looking at Aussie yen. The reason why I'm looking at Aussie yen this week, it's going to be an interesting market to take a look at. Obviously, we've recently had some risk off, risk on sort of play in the market. The yen has become weaker, the yen has become a little bit stronger. We've also seen the Australian dollar play around with that risk effects as well by becoming weaker and stronger. So it's an interesting market to look at. Will it break back to the upside? Will it start to break lower? That's one of the questions we're going to be answering with this technical analysis breakdown. We also have quite a bit of Australian dollar data coming out. So we had some retail sales data out month on month, which came in at 0.5%. That was a positive for the Australian dollar. We've got the RBA governor designate Bullock speaking as well. We also have some CPI year-on-year data coming up, and then we have manufacturing PMIs in China, which I think is probably going to be a big one for the Australian dollar, Japanese yen this week. Obviously, again, that risk on, risk off play with regards to if we do see further economic slowdown in China, how is that going to affect the Japanese yen? Are the markets going to rush to safe haven currencies like the yen, or are we going to see something different if we see a shock number and we see the actual manufacturing PMIs coming a little bit above expectations? So that play is interesting to me this week. Instead of just doing a typical these are the levels to watch out for video, I'm going to show you how I break down a market week to week. Now, it's important that you refresh your charts quite often. You want to make sure that you're always referring back to your higher time frames. The reason being is the analysis is much clearer on higher time frames. There's a lot less what we call noise in the markets. First things first, we're going to be starting out with some real basic support and resistance levels, and this is something you may or may not know already. But one thing I like to do is just switch over to a line chart. Line charts can really help us sort of identify key levels of support and resistance very clearly. Now, line charts are going to take into consideration your opens and closes. They're not really going to take into consideration any type of wicks. So for instance, if I was to place a line down here, we can see that that says 57.10. If I was to flip back over to a candlestick chart, we can see that the wicks have gone below this by about 200 pips. So in that kind of scenario there, what we can do is just look at 57 and say, okay, that is the low of the chart right now. I'm just going to make sure that that is on a whole number. We want to be using whole numbers, quarter numbers, or half numbers as we do in our analysis, as the market does tend to bounce in between these levels. So first of all, I do like to go to the monthly chart. I like to spot the high and the low. So if I was to then refer back to that line chart in here and just place a line at the high, it says 107.45. Again, if we kind of look at it from a candlestick point of view, I am just going to round that up to 107.50 first. From a candlestick point of view, we just need to look to see if that's fine. Yeah, it is. We can see that it actually engages a wick back through July of 2007 as well. So you can continue to do it like that, or you can just have it open as a candlestick chart. What I tend to do is just open the cursor up, and we're going to go and we're just going to have a little float down, and you can see using the cursor just kind of gives us that option to have a little look at some horizontal levels of support and resistance. And first of all, you just want to point out the most obvious point. So you can see here, for instance, I think there's an obvious point around about 101. We could probably round it up to the 102 level if we did want to really include this area over here as well. So I like to use a trend line. The way you can use these trend lines and set them up, if you go to the properties, you can see that the style is yellow. I have a dash line and a small solid line there. You can also choose the visualization of this. Because we're on a monthly time frame at the moment, I'm going to leave it as is. So again, just right click, go into parameters. We want to set that so it includes everything there. It's at 102.48 actually at the moment, so I'm actually just going to round that up to 102.50. The reason being is because if we do start to go down the time frames, obviously these wicks will fill in with candlesticks as well. So you want to be in a fairly neutral area with that. What I like to do then is just add some price labels. This makes it super quick for me to then analyze the chart at any given point. If I just flick over to the charts, I can see that price is coming into the 102.50 potentially next. So that's going to be my point of interest, especially if we trade out of these recent highs. So the next sort of level that's caught my interest are these recent levels. I always take into consideration what's happening most recently, because obviously price is reacting to those levels now rather than back in 2007 or whatever. So we want to be able to make sure that we're looking at recent levels as well. So I can go into the parameters here. It says 96.54. Again, we can probably round that up to 96.50. We could even round it up to 97, looking at those wicks there. So again, just kind of go to 97 on this. Click OK. You can see that we incorporate those wicks in here, and again I'm just going to add a left price label into this just so it's nicely tucked out of the way when we're doing the analysis, and again just add that 97 handle. So I'm just going to repeat this and go through a few more levels of interest. Again, you don't have to span it across the whole chart. If I look here, for instance, and I see that there's a bit of a level going on down through this area here. If at any point I want to see what it's doing, I can just go to ray left as well, click OK, and you can see that it comes all the way through these points. So I don't need to highlight the whole chart there. Just something that's eye-catching to me is that area there. You can see it says 88.70. So we can either go to 88.75 if it's the quarter number, or we could probably bring it down to 88.50. Again, this is completely personal to you. I'm going to click 88.75. We can argue that at some point 87 or 87.50 is sort of within that area, or 88. So it covers a range at least at that point. So I'm just going to leave that as 88.75 for now. And this is all I'm going to do, because I'm going to go through every time frame. We're going to go on the monthly as well. Again, just down through this area here is kind of piquing my interest, as well as obviously that area we've already kind of spoken about, which price has kind of come into. But this area is kind of gaining a little bit of interest for me as well. 79.66. I'm going to round that down to 79.50 in here. And again, just label up as many things that you think is important. Now, the next thing I'm going to move on to is our any other kind of points of interest. So you can look at trend lines as well. Trend lines, I'm not the biggest fan of trend lines. I do think they are subjective. We can have a look though using our cursor tool here, our crosshair tool, that we can go to the top of that wick there and kind of expand it out and see what trend lines would be kind of showing us. So I can kind of see there's a trend line down through here. If we can, from this low, for instance, to that low there, so the low that formed on the 1st of November 2020, and then it touches the low back in August of 2021. We can see that price expands out. Now, the next thing we can do is look for any kind of channels in the market. So we're going to double click, we're going to hit control on our keyboard, and we're going to drag it up so we can see if there's any kind of confluence there. Now, at the moment, we can argue there is a little bit of confluence, because obviously this extends through, touches that level there. We copy it to the next high, and you can see all that action going on through there. So there could be some kind of channel going on here. So I don't want to discount that, so I will leave that on the charts for now. But the one main area for me now is looking at this monthly chart. We're trading between 97 and 88.75 with some room to the downside there. But that was going to be my key levels of interest. Now I'm going to go to the weekly time frame. Now you might find that when you've gone to the monthly and put your analysis on and you come to a weekly time frame, there's not necessarily any more analysis that you can add on, particularly to the chart. That is kind of like what we're looking at in here. You can see 92.75 though is definitely something that's being highlighted by us through this area there, but that could also be highlighted on a daily time frame. So sometimes you might want to skip down slightly. Now you can see here these lows are coming into interaction there, so that 93 area is going to be of importance. So I'm going to round that up to 93, or round down, sorry, to 93. We're going to have a little look at to see what price is doing in and around this point in here. And now you can start to see that we're building a bit of a bigger picture. We're trading between that 97 handle, that 88.75. Again, kind of looking at this 88.75 now, we can kind of scroll down and say, okay, well, actually 88 could be a little bit of a better level of interest. But instead of having to draw a new line, you could just add a little bit of a zone there with a rectangle. So we just know that there's a bit of a zone running through that point. What I like to do then is just do the exact same process. We're looking at those horizontal levels. We're looking at some trend lines in there as well. I think I can see something kind of developing here where we go from this high to this high. You can see there's a real strong trend line resistance coming through there. And again, that's kind of helping me build a bigger picture for Aussie yen. So if we go and do a little bit more of a top-down analysis now, if we go back to that monthly chart, we can technically say price is trading in an upward trend. We know that because we're making higher highs and higher lows, okay? We've recently come into resistance, okay? Price has rejected that resistance, but we're not really seeing really strong selling pressure coming here at this current moment in time. So we can tick off that the higher time frame is in a bullish phase. We go into our weekly time frame. Again, we can probably safely say that price was in that sort of bearish phase in here. Ever since it's traded through 93 highs, we could consider ourselves bullish, okay? Next phase, I'm going to go down to the daily time frame now. So this is where I'm kind of building in sort of a bit of a bigger picture in terms of patterns and things like that. So what I'm just going to point out to you here is that we obviously had a really aggressive rally here. We're now just kind of consolidating back. So you can see it kind of looks like a descending triangle. Now, what we may be able to see from that is a breakout and a continuation from which way the price came into that pattern. So there could be an option here that if we were to break out through this trend line resistance or breach it, it could be a sign that price is going to trade to the next level of resistance, which could be this 97 handle. So you can see how we're now building that sort of bigger picture. What I can also see as well is that if we reject here and we trade through the 93, that there could be a possibility that we come down to around about this 90 level where that trend line support is coming through. So by using the higher time frames initially, we've been able to build in this kind of bigger picture of what could potentially happen to price, or at least give us a technical perspective of if this happens, what could it tell us? And that's the importance of technical analysis. It's not a definite, of course it's not a definite, but there is an option for you to say, well, if we breach that trend line, what does that tell me? If we breach this trend line, do we then meet other parameters to suggest that it could continue higher? One of those parameters could be looking at your moving averages. Do they separate? Do we see a move to the upside? If I go to the hourly, for instance, you can see that the moving averages are quite close. If I just move that into a 200 exponential moving average, just kind of make the price a little bit flatter, a little bit smoother with the longer time frame moving average, you can see they're starting to part a little bit as well. So this could be a potential for price to break to the upside there. And that's the one thing I like about Aussie yen this week. I think because of the fundamentals in play and the technicals here, it gives us something to go with. So in terms of if the data out of Australia is good, if the market then deems we have like a risk on rally, Aussie yen may breach the trend line support, trend line resistance, sorry, and then it may start to trade back to the next level of resistance, being that 97. If the opposite happens, we get that risk off play, then we could trade through the lows here. But we know that we've got two sort of key areas kind of containing price at the moment. So that's something that we can use to our advantage. Hopefully you really enjoyed this video update. I know it's a little bit longer than usual. I hope you learned a lot out of it on how to break down a particular market. And yeah, I'll speak to you in the next video. Please like and subscribe if you enjoyed it. And I'll speak to you soon.